Hi, everyone. Thank you for coming to my live stream. Happy semi-quincentennial, America 250. I know you can feel however you want about this holiday, but we all get a day off tomorrow. Hopefully, you get a day off tomorrow. We get a long weekend. And it's always fun to say the word semi-quincentennial. So celebrate that word, if anything. Okay, so I know everybody's going into the holiday weekend. Going to try to keep this light, just talk about what's happening in the economy. When you're at your 4th of July barbecue, maybe you will learn something that you can repeat, and then you can sound super informed about what's going on in the housing market. You can explain why it's so expensive to buy a home, why no one's selling, and also be talking about some other interesting economic trends that are happening. So thanks for watching. But first things first, I always like to start off with our latest Redfin housing market news. We put this data out weekly. It was just published this morning, so this is fresh off the presses. And the big headline today is that monthly mortgage payments have ticked up for the first time in 8 months. I know it's hard to believe, but monthly mortgage payments, like basically the thing that you pay every single month to own a home, what makes housing so affordable or unaffordable, has actually been getting a little bit more affordable this year because mortgage rates are lower this year than they were last year, despite home prices being higher. But mortgage rates are remaining stubbornly high, home prices are remaining stubbornly high, and those mortgage payments actually went up a little bit this week. So, not a great news for affordability and our progress on affordability there. Pending home sales improved a little bit. I've been talking about my previous streams about how the number of homes that are accepting offers has been on the decline for like about 4 weeks straight, and then this week we saw a bit of an improvement. So even though affordability is getting a bit worse, more people are making offers on homes, just a little tiny bit more. So that's good. This weekly data, it's always small changes, but it can kind of tell us what's happening out there. But yeah, sale prices still up 2.5%, lower than inflation though. So in real terms, sale prices are coming down year over year. Asking prices, however, the prices that sellers expect for their homes, those are up 3.7%. That's a little bit faster than inflation, depending on what measure of inflation you're talking about. So sellers are still expecting that their home is going to retain its real value. But then when they end up selling their home, they're making a little bit of a cut there to get the home sold. Like I said, pending sales have increased 2% year over year. They're improved a little bit this week, but they're up 2% year over year. New listings up a little bit, 1.7%. So it's nothing really earth-shattering happening this week in the housing market. It's still, the same story of mortgage rates being high, home prices being high, and the housing market more or less being stuck. So I'm going to move on to some other interesting stories happening. So this opinion essay in New York Times got a lot of attention. It was about the impact of data centers on the overall economy, titled "The Generational Force Hollowing Out the Economy." Oh, we got a question. Thank you, David Lids from Maryland, for chiming in. Do you monitor mortgage delinquency rates? So I do keep track of mortgage delinquency foreclosure. I don't have that data right in front of me right now. I can go research that. But what I believe is the trend in terms of foreclosures. Let me just go back here so I have a nice housing market visual while I'm talking about mortgage delinquency. The trend that we've been seeing is that more people are going delinquent on their mortgage, but it's still a very small percentage of people compared to the amount of delinquencies that we saw during the foreclosure crisis. Now, obviously, the foreclosure crisis was a crisis. It was like the worst it could possibly get. So I think what we need to understand about the housing market right now is that, yes, some people are going to be going delinquent on their mortgages, like in any market. People are going to run into crises in their life, death in terms of their family, a medical expense, losing a job. All of these things can result in people going delinquent on their mortgage. But most people are able to keep themselves afloat because of how much equity they have in their homes. If they can't afford their mortgage, but they have a lot of equity, they can go to their lender and they can negotiate some type of refinance. Now, rates are really high, so that refinance is going to be quite expensive. But with all that equity that people have in their homes, they're able usually to make the math work. So there's still a very low percentage of people who are entering into foreclosure, having to do a short sale, or going delinquent on their mortgage, because they're able to figure it out because they have all this money in their house that they can use to negotiate with their lenders. So I don't really see mortgage delinquency as being a problem in this market now because of all the equity that people have in their homes. But that doesn't mean it's not a real problem for people who maybe bought during the peak of the housing market back in 2022, especially if they bought in a very volatile market like Austin or Las Vegas. They might be underwater on their homes, and if they're having trouble in their lives, in their economic lives, and they could be entering into delinquency, and that could be a real crisis for those individuals. But it's not at a level yet where we really need to be worrying about that impacting the overall housing market. But good question. Before I move on, I guess I'll pop over and see if I have any other questions. Okay, someone said on TikTok, oh great, only half as bad as a complete collapse. I would say it's more like, a 20th as bad, not quite half. But yeah, thanks for everyone on TikTok who's saying hello. Yeah, someone says they can't wait to get all the data they need to buy a place. If you actually want to see data on your particular location, you can go over to the Redfin data center. You can Google Redfin data center or go to redfin.com/news/data center, and you can find local housing market data here. Like if I click on housing market tracker, I'll pull up, let's see, let me pick a metro. I'll pull up data from Milwaukee. I'll pick somewhere in particular, but let me know if you want to see something else. And you can see local housing market data. The Midwest is a place that has had really strong demand, and the housing market and values are going up. So you can see here that prices are up 4.6% in Milwaukee metro area compared to the 2% I talked about nationally. Many more pending sales happening in Milwaukee too. Pending sales are up nearly 15% from the previous year, way outpacing the national market. And we got all this cool data here, and you can see this for any metro area. And we have lots of cool dashboards about how many buyers and sellers there are in the market, the luxury home market, price drops, purchase cancellations. You can see it here. I don't want to just read you the phone book here, but we have so much data. Somebody on TikTok said that some foreclosures are not recorded when the HOA takes the home and the bank takes it. I wasn't aware of that, but you're right to point out that HOAs can be a complicating factor when it comes to foreclosures. And also HOA fees are going up quite significantly. And if you have to pay more for your HOA, you might not be able to pay your mortgage. So as somebody who has a condo in an HOA or even a single family in HOA, that can make things a bit trickier because although your mortgage payment is fixed, your HOA payments aren't necessarily fixed, and that can make life in general more expensive. Cool. Okay. Let me see if I got any questions on Instagram yet. Can you share a little bit about housing price drops, said a myth? Yeah, happy to. So let me hop on over to my dashboard and look at price drops. I will look at these nationally. Nationally, the number of homes with a price drop is down 3.1% year over year. And even the share of active listings with a price drop is down 1% year over year. Now, I think the reason that price drops are down, you can see the share here in the red line and the average size of the price drop here in the blue line. And what we're seeing here is that price drops are a little bit less frequent. Oh, wait, this is not zooming out right. Let me refresh this. It might be just like a loading error because that was 2021 data I was looking at. Do I need to resize this? All right, I'm going to ignore that chart because that chart isn't showing up well on my stream. But basically, what is happening right now is that sellers expectations have changed. It was really tough. It was a really tough pill to swallow for homeowners that their homes were not fetching the prices that they were expecting, and this was a real shock to them when mortgage rates first went up in 2022 and 2023. That's when we saw the most price drops because sellers just couldn't fathom that their home wasn't selling for more than what it would have been worth a year ago. As time goes on, sellers' expectations have changed. They understand that the market is different now. They've heard me on the news talking about how the market is different now. And they are a bit more aware now that if they want to sell their home, they're going to have to price competitively from the very beginning, which means that if you are pricing lower from the beginning, you are less likely to have to go through a price drop. So even though prices are still like pretty stagnant and it's still a seller's market, sellers at least are calibrating a bit better, and we're seeing fewer price drops as a result. Okay. Cool. Okay, so in terms of the housing market, I'll just wrap up and say that it's still tough out there. It's tough for sellers. Many sellers can't afford to sell because they would give up their cheap mortgages. And if they bought again, they'd have to buy at much higher mortgage rates, which makes that expensive to sell. And then buyers obviously are up against high prices and high mortgage rates, so they don't want to buy either. So the for sale housing market is pretty stuck right now. And then rents have been pretty stable. So if you're a first time home buyer deciding whether to give up your 2-bedroom apartment and upgrade to your forever home or your long-term home, it's very expensive to do that right now, and it's relatively affordable to stay a renter in an apartment building. So there isn't much demand coming from that segment either. Not a lot of resales, like people selling and buying again. So there really isn't much action happening in the housing market. And this has been the theme of the housing market really since 2023. We've been doing this for like 3-4 years now, and nothing's really changing. And a big part of this is that mortgage rates are so high. And I was going to talk about my mortgage rate forecast. Should I do that now? Let me see. I guess I could talk about mortgage rates now. So I was going to talk about this later. No, I can talk about it now. Okay, so a couple of years ago, I was one of these economists who was saying that the increase in mortgage rates was going to be temporary, that they went up because there was this really bad inflation that happened in 2022. And when Biden was president, I mean, it wasn't his fault necessarily, but inflation went up to 9% in 2022, which was a really scary amount of inflation that we're still reeling from. But the consensus amongst economists back then was that it was transitory. It was going to be temporary. It wasn't transitory. It was not temporary. But then there are these other kind of transitory things that came into play, like the trade war. The trade war is a one-time increase in the price of imports that contributes to inflation when it happens, but not in the long run. So people thought like, okay, once we get these tariffs kind of through the economy, then mortgage rates will come back down, then interest rates will come back down. But then the war in Iran started. And that seemed to be another temporary thing. Okay, we're having this temporary conflict with Iran. The Strait of Hormuz is closed. It's going to reopen eventually, right? Like, what a crazy world it would be if it stayed closed forever. Meanwhile, we're months into it and it is still effectively closed. I don't follow geopolitics too closely, so I don't really want to weigh in on the openness of the strait. But it seems to be like at least still a problem, to say the least. And even when that deal was announced that the Strait of Hormuz was going to reopen, like I thought that would drop mortgage rates. So mortgage rates did not drop, or they dropped by a very, very tiny amount. We did not get back to the 5.99% mortgage rates that existed the day before we went to war in Iran, or that we started the conflict in Iran. And why is that? Why haven't mortgage rates come down? Now, I think the reason why, and I am planning a much longer YouTube video on this. I have a script, I have graphics. It's going to take me a while because it's a very complicated topic and I really want to get it right. So stay tuned for that. But a preview of that YouTube video that I'm going to put out is going to explain that there are long-term secular trends that could keep interest rates high for the long run. Okay. B of A, Deutsche Bank, came out June 22nd, a couple of weeks ago, and said that they actually expect the Fed to raise rates in September. That would be 3 interest rate hikes this year, which was not something people were talking about earlier this year. So at least the Bank of America is kind of on board with this reality that I am approaching. Maybe it's not a reality, this theory of interest rates that I am approaching, which is that we could have mortgage rates above 6% for the long run. Like, I don't think that there is a compelling reason to assume that mortgage rates will drop back down to 5%. I know that this is probably like me doing a bit of a 180 on what I was saying a couple of years ago, But I am the kind of person who learns and observes and adjusts my perspective, okay? I'm not ashamed to change my perspective on the economy when I get new information and things change. So Bank of America, they are also coming out like this. And this kind of dovetails into what I was going to talk about with this opinion article, which is this opinion article, The Generational Force Hauling Out the Economy. They make the argument, which I made in a YouTube video like 2 months ago, okay? Not that like I'm the only person saying this, but I was saying this months ago, that investment in AI data centers is crowding out investment in other areas and increasing interest rates. And the reason and the theory behind this, I mean, it's kind of illustrated by this graphic a little bit, is that AI is this technology that could be extremely profitable. And when investors are deciding where to put their money, they're always going to put their money into the thing that they think is going to give them the highest return. So there's been hundreds of billions of dollars put into AI data centers. Real money is going into those data centers that might otherwise have been invested in something like mortgage-backed securities. Now, that money could have gone really anywhere in the economy. It could have been, invested in the stock market. It could have been, kept in the bank, and then banks would lend it out to other people that go to the bank for loans. But the money isn't sitting in the bank for these people. They're putting it into data centers, and that is a contributing factor keeping interest rates up. And this is a long-term trend. I think that this attractor in the AI economy that is attracting all this money is going to be around for a while. And that's one reason to think that mortgage rates are going to be high for a while, because if people who have all the money, the global money, if they see that AI is a better investment than something like a mortgage-backed security, then that keeps mortgage rates high. Because when investors put their money into mortgage-backed securities, they are funneling money into the mortgage market, and there's more money to lend out to everyday home buyers. But that money, if it's not going into mortgage-backed securities or US treasuries or these other sources, that keeps interest rates high, because the interest rate is like the return that these investors get for buying mortgage-backed securities. The interest rate has to get higher and higher in order to attract that money away from data centers, which they see as this very profitable place to put their money. So that's what this opinion article is about. It's been kind of debated on the internet, but I tend to agree with it. I don't agree that there's something in here about new homes that could ease the affordability crisis aren't getting built, but as land slated for houses is sold to data center developers. I don't agree with this part. I don't think that the land that data centers are being built on is the type of land that is most prime for housing development. It seems like most of these data centers are getting built in more rural areas with cheaper land, like agricultural land is being sold to these AI data centers. It's kind of rare to find a data center that's in residential area. I mean, there are a few examples. I talked about an example in one of my past live streams. I don't think it's a story of competition for land. I think this is a story about competition for money itself. And if all the money is flowing into AI instead of into the mortgage market, that keeps mortgage rates high. So that's one reason I don't think mortgage rates are going to come down. There are other reasons that I don't think mortgage rates are going to come down, but I'll get into that in my YouTube video. But in general, like I just don't see a strong narrative here, like a strong reason why mortgage rates would fall. I don't see something coming in the economy besides a recession. A recession would definitely lower interest rates, but that's not a guarantee. A recession can happen basically at any time for any reason. So like, I'm not baking that into my forecast for mortgage rates. I'm more talking about these long-term trends, which economists call secular trends. And I think AI is a very dominant secular trend right now that is keeping interest rates high. Okay, so David Lids 1909 asks over on YouTube, 5 to 7% is arguably a reversion to a modern, like post-1930s historical mean-ish rate. Yeah, I mean, I think that I don't think that like mortgage rates necessarily need to converge on a historical mean. That's definitely a good guess for where mortgage rates are headed, is to just look at like the long-term historical average and say that's what it should be. But I think the future could look very different than the past. And AI is a reason for that. Like, we just live in a very different world and economy than what was existed historically. Like in the mid-century of the 1900s, we didn't have this financialized mortgage market like we do today. The financialization of the mortgage market has kept mortgage rates lower because it's just easier to sell and trade mortgages, and that creates more liquidity for the mortgage market, which brings mortgage rates down. So I don't really think that like what was going on in the 60s and 70s, that doesn't really enter into my forecast, because I think that the mortgage market is so different now, the economy is so different now. But I think that that also applies to the 2010s. What was happening in the economy in the 2010s is nothing. Well, it's very, very different than the economy right now. In the 2010s, we had this secular trend. I can keep using this jargon, but maybe you'll learn something. You can drop a secular trend at your 4th of July barbecue. People will probably look at you really funny. But I think in the 2010s, we had this secular trend of secular stagnation, which was that like after the fallout of the Great Recession, the economy like really had a hard time getting restarted. That recession was so bad that even after the official recession ended, we had very low economic growth, low inflation too, which was, at least we had that. At least we had low inflation, we had low mortgage rates, but we also had very low economic growth. And now we are past that period in our economy. We are no longer in a period of secular stagnation. I think that remote work, the pandemic, AI. I think this was actually starting in 2018, that we were getting out of the secular stagnation period. But it's kind of hard to call exactly when that phase stopped and when whatever phase we're in right now, which I would characterize what we're in right now as a period of everything being expensive. Like the economy is growing, but everything is expensive. That this phase of the economy, I think it really started even before the pandemic, but the pandemic definitely accelerated it. And in an economy where the economy is growing, there's lots of demand, and things get more expensive. That's when you have high mortgage rates. And we could get to this future where AI is making things cheaper, but we have to kind of pass through this phase of building these data centers, and these data centers are very expensive. And the data centers themselves, this is a great segue into the next article I want to talk about from the Wall Street Journal by Justin Lahart, is in of itself contributing to inflation, because all of this money being spent on data centers is driving up the cost of memory chips, of computers. Have you tried to buy a computer recently or an external hard drive? I have. It's definitely expensive. And it's because we're competing for these computer chips with these data centers. So we're going through this phase of like industrial investment that is very costly. There is this promise at the end that we will have this abundant future where things are cheap because of AI, and we have a 4-day work week or whatever it is that you want to theorize about. But for the near term, things are expensive. There's a lot of economic growth. It's great that there's like, I don't know if it's great, but it's good that we're not in a recession, because without all this AI investment, we would probably be in a recession. But it is making things quite expensive, and that also drives up mortgage rates. So I don't necessarily think mortgage rates are going to go up, but I think the most likely thing is that mortgage rates stay where they are. And I think the upside risk of mortgage rates going up is more likely than the downside of rates going down. That's where I'm at. And it's been a slow process for me to get here, because I kind of had to let go of this idea that this inflation was transitory. But I think I'm releasing that belief for the time being. But yeah, data center boom, I think. People are mad at these data centers because of all the environmental effects, because they use up resources like water. They use up energy. That makes things more expensive. Using up energy itself makes things more expensive. And a lot of people don't necessarily believe in the promise that it is a transition period to get us to a better economy. But we don't have many other good ideas in the economy right now. That was the problem with the 2010s, is that we were in this decades-long period where people just didn't have good ideas for how to make the country more productive, richer, technology innovations. The internet was great, but as many economists have argued, it wasn't really like a big productivity booster. Maybe it was a big entertainment booster, big leisure booster, but not necessarily a big productivity booster. And I think the most promising thing we got going on right now is AI, which is why all the money is going into it. David Lids says, I think what I may be thinking is that under 3 to 4% rates is money printing, stimulus, kind of monetary policy, not a norm. So mean that way. Is 3 to 4% money printing? I have to think about that some more. I'm not really into like thresholds like that. I think that there is an economy that could be very strong that still has 3 to 4% rates. It would be an economy that is incredibly efficient. Like I think this is the economy that we're kind of hoping for, with energy abundance, AI abundance, housing abundance, whatever you want to call it, where everything is so cheap and inflation is so low that you can have real economic growth of about 3 to 4% with very, very low inflation, to the point that the Feds, they have this 2% mandate for inflation. You can have a strong economy with really low inflation where the Fed still needs to lower mortgage rates to get the inflation target to 2%. It is almost a utopia of an economy where the economy is doing so well and inflation is still so low that the Fed has to set rates low to get you end up with 3 to 4% mortgage rates. Maybe it's a little bit unrealistic, but I don't think it's impossible. I don't think 3 to 4% mortgage rates is necessarily over stimulus to the economy, or the kind of thing that you would only see during a recession. Before the pandemic, we had 4% interest rates, but we were coming out of that secular stagnation period. So we were still kind of battling this too low of inflation problem, too low of economic growth problem. Let me hop on over to TikTok and see if I got some comments there. LLM degrader, obviously somebody who doesn't like AI over on TikTok, says, meanwhile, Meta is starting a business to sell spare compute. So that if Meta is selling spare compute, I think a negative take on that is that they are building too much in terms of these data centers. They have overinvested in data centers. They have excess capacity that they are now selling. I think a more positive take on this is that in our AI future, it won't just be these mega corporations that are using up compute. There was a paper that came out today. I wish I had it ready to go to show. It was today. A paper that came out this week that seemed to show that highly specialized local AIs are actually better at doing what they do than generalized AIs. So like if I on my own computer license some compute from Meta and I spin up my own AI model to do some very specific task. I don't know what this task would be. Maybe this task would be it edits my YouTube videos for me. And I have it train on all of my data or the data that I give it, and it's very controlled. Like I'm only feeding it like data that I deem to be high quality, that is useful for me getting to this goal of editing my YouTube videos with AI. It seems like that could be a more successful model, a more a better, more efficient model than using a large model that these mega corporations are building out. So I don't necessarily think that Meta licensing compute is like a bad sign for our AI future. It actually could be a good sign that these mega corporations are starting to realize that like these localized AIs are going to be a very real competitor to their large models. Okay, let's see. Hopping over to Instagram. Okay. And some Robert Clark, I almost called you Roberto. I don't know why I said that. Robert Clark says Henrico County, Virginia, home to 30 plus data centers, is asking municipal buildings to turn off lights, expecting a $5 million jump in utility costs. That will be passed to homeowners, directly impacting their ability to pay. Yes, that is a good point. These data centers, although I don't think they are competing for land with residential housing, they are competing for energy. And energy is a necessary input to almost everything we do. When energy costs go up, there's really no way around it. It's something that we say has inelastic demand in economics, that even when the price increases, people still consume the same amount of energy. So when energy costs go up, it just makes people effectively poorer because they don't have a way to navigate around that energy cost. Like during a heat wave, you got to run your AC. When it's freezing in the winter, you got to run your heat. So that is a legitimate reason for people to be pushing back on these data centers, because they are making things more expensive, and they are making things directly more expensive in the areas that they are being built. And I think it's fine to be skeptical of this future promise that we got to build the data centers to get us to this better place. I think we should be putting pressure on our political leaders to accelerate investment in clean energy, abundant energy, nuclear. I like nuclear. I know some people think nuclear is not the way to go, but I think nuclear is the way to go. So that, we get to a future where everything is cheaper, and it's not like this zero-sum game between the people paying for their energy bills to heat their homes and the data centers using up energy. And if it's dirty energy like natural gas, and that is like a negative sum game that we're playing. So we got to turn this into a positive sum game somehow by really ramping up our investment in clean, cheap energy. But that in of itself is going to be expensive. Like building nuclear power facilities is not cheap either. But if these AI companies have this hundreds of billions of dollars to put into data centers, they could be putting that money into clean energy, clean, cheap energy technology. And I think they are. They recognize this. I'm not telling them something they don't know. So, okay. So unless we have any other questions about data centers, I was going to move on to my next topic, which is a bit political. Big news this week with so many leftist candidates winning in New York and in Colorado. And there's a lot of discussion about their economic policies. So Alex Armlovic, am I saying that right? He works for the Niskanen Center. He's my mutual on Twitter. Tweeted something that I think sums us up pretty well. So there's been this narrative, Vox put this out, that the DSA candidates, the people on the left, are winning, and because they are winning, the abundance movement, the people who are advocating for more investment in, more deregulation of housing, reforming zoning laws, permitting laws, investment in AI, like in the book Abundance, if you haven't heard of it. It's just basically this idea that we have to be making things cheaper and more abundantly available to get to a better economy. Vox painted it as like, because the DSA candidates won, that means that abundance has lost. And Alex here is pointing out that abundance doesn't necessarily mean centrist. It doesn't mean centrist or leftist or on the right. It's like its own orthogonal ideology, that you have people like Zoran Mamdani on the left who are implementing abundant type policies, clearing the way for more dense housing, even market rate housing to be built in New York. He's not solely focused on social housing. And then you also have somebody like Karen Bass, who is a centrist, who is anti-abundance, who is a NIMBY, who is not prioritized enough housing being built in Los Angeles. And then he points out some people on the right too. Montana has been a state that has made it much easier to build housing in response to so many people moving into Montana. They've eliminated single family zoning, and they're allowing for more abundant housing to be built. Then you also have people on the right. He points out the New York Assembly as being an example of people on the right who are making it harder to build housing. So it doesn't like cut neatly across these lines. But I think that what is so confusing is that I was looking at the DSA, the Democratic Socialist official website. Their official stance on housing is not at all aligned with the abundance movement, with this YIMBY movement. I mean, I could go through this. I was reading it and I was just kind of like, wow, like this is what they really believe. Okay, so The abundance movement says that social housing is when people live where we want, with whom we want, and how we want. I support that. I think people should be able to live where they want, with whom they want, and how they want. That sounds like the free market to me, like choice in the market, economic freedom. But to that extent, that we can imagine using all available resources through a democratic process. And this is where things get kind of off the rails for me. So what they want, or what their principles are, is they outline it here as redistribution from landowners, meaning taking land from current owners of property and land and making it the property of the state. Now, I've talked to people who identify as socialists, and they say that this is not what socialism is about, that socialism is not about taking the means of production, including land, and making it property of the state. But this is on the DSA website, so this is the official stance of the Democrat Socialists. And I'm not even totally against this. I just think it should be done through taxation. Land tax. I talk about land tax a lot. So you don't have to actually like physically seize land. You can just tax it. I think if that's what they're talking about, then I'm okay with that. Democratic control. Social housing must authorize those who directly depend on the provision of housing in question to decide the fate of their community. Social housing prioritizes and makes real the collective will of tenants. Democratic control of housing is a key difference. And this is also something that I don't agree with as an economist. I'm really trying to only approach this as an economist. There are other political beliefs that the members of the DSA have that I won't comment on, that centrists have that I won't comment on, and that Republicans have that I won't comment on, but I'm a housing economist, so I'm going to try to, from an economic perspective, evaluate these housing policies, okay? They want democratic control of housing. And they kind of get into this, what this exactly means lower on. Let me see if I can find it. Okay, so what they want in the short term, this is only in the short term, is state-provided, free, publicly owned and managed homes and apartments available to anyone with the right not to own. Okay, so far so good, okay? I'm not against social housing. I think social housing is a great way to redistribute wealth to people who are in poverty. Like I think when someone is existing in poverty, they are not able to fully contribute to the economy. If you're worried about having a roof over your head or having food or what your kids are going to eat or where they're going to sleep, it's impossible for you to be a productive member of the economy. So I think that like in the ideal economy, we do want to have some kind of social housing that makes sure that people don't have to be in despair about having a place to live. But this part about democratic control by residents, I think that is like a real economic mistake. And the reason I think that is because voting is inefficient, okay? Market-based allocation of housing is always going to be more efficient than housing that is allocated democratically. And if you have, say, a condo building or an apartment building of tenants, and your plan for how to manage the choices for that building, like whether to invest in a new roof or whether to, invest in a new security system, or whether to lower rent with the money that you have, if you're going to leave that up to a democratic process, you're going to run into a lot of problems. So one of the reasons why voting doesn't get you the optimal outcome is because of something called Arrow's impossibility theorem, which basically proved mathematically that in any voting system, and this even includes ranked choice voting, it matters what choices you present to the voters. So if you ask tenants, should we lower the rent or should we invest in a new roof? And then you ask tenants, should we lower the rent or should we invest in a security system? And then you ask tenants, should we invest in the roof or the security system? What choices you present to tenants is going to alter what they vote for in a paradoxical way, where sometimes, people are going to prefer the new roof to lowering rent. And then sometimes they're going to prefer lowering rent to the new roof just by virtue of introducing new options. And ranked choice voting helps with this, but it doesn't fully solve this problem. Okay, so if you're going to have an organization where everything is determined by voting, it's going to result actually in worse outcomes than if you had a system where there is an owner of the building who is making choices to maximize profits. And I know that people on the left really abhor the idea of a property owner making choices to maximize profits. Oh my God, like that's the worst thing in the world to them. But that's what gets you the most efficient outcome and the best management of that house, of that condo building. I know that's hard to believe. I know that these apartment owners are painted as being like very greedy and making choices to the detriment of their tenants. But the thing about an apartment owner is that they want to make choices that increase the value and that increase the rent and that like allow them to rent out to higher quality tenants and that protects their investment. Now with social housing, there isn't going to be an owner of a building, but what you would probably have instead is an expert, like a nonprofit or government official, who is making choices for the benefit of the tenants that avoids direct voting from the tenants. Because if you have direct voting from the tenants, it's not going to result in efficient outcomes. And I talked about the arrows and possibility theorem as one reason for that, but there are other reasons for that. One is that, well, a lot of the time tenants are just going to vote for lower rent. I'm not like faulting the tenants, but like if you give people a choice, do you want to invest in a new roof or do you want to lower your rent? 9 times out of 10, they're going to lower the rent. And this is one of the reasons why we saw this condo collapse happen in Florida a few years ago, was because these HOA members in the condo kept voting again and again not to invest in their own maintenance and their own safety. And then the building collapsed and a bunch of people died. Okay. Very real consequences there for deferring maintenance and voting for rent cuts. And maybe like there's a world where people vote for the long run safety of themselves and they're able to assess that risk properly. But like, are you really going to get a majority vote every time? I just told you with the arrows and possibility theorem that it depends on what options you present to people, how they vote. So in Florida, the state of Florida had to intervene and mandate that HOAs have funds to do maintenance. So even for privately owned condo buildings, which are managed by HOAs, which are democratic, there had to be state intervention that overrode that democratic process in the HOA. So this idea that we're going to have social housing that is under democratic control, I don't think that's going to get you the outcome you want. I really don't. Okay. And then another thing also why you wouldn't want to have democratically run housing is that who wants to show up to these meetings and learn all about this boring stuff about how to maintain an apartment building? Like, that's a lot of time. People don't have time for that. I don't like, one of the reasons why I don't want to live in an HOA is I don't want to be going to HOA meetings. I don't want to deal with an HOA telling me what to do, because like if I don't show up to the meetings and then they all of a sudden they vote that I can't play music past 8 p.m., now I'm subject to that rule. And like there's this trade-off, like do I show up to the meeting and I vote, or do I not show up to the meeting? And then the minority of people who show up, who are probably very strange people who spend their time at HOA meetings, they're the ones dictating the rules. So I personally wouldn't want this. I mean, there are people out there who do want it. Obviously, like having social housing is a benefit of it in itself. I just don't think it should be democratically controlled by the tenants themselves. I don't think that's going to get you the good outcome. All right, David Litz says, I work in the cooperative housing sector. Co-op members don't directly vote on business decisions. They elect a management team that makes the business decisions like a corporate board. Yes, I think that's a good model. I mean, that is like how my mom's HOA works too, is that you elect a board and they make decisions and then everybody complains about the board's decisions. But this is like a representative democracy, and I don't understand why people in the DSA think that democratic control by the residents rather than NGOs or existing government entities are necessary. Because in social housing, I think it makes sense that people vote on who's going to be their politicians and who's going to be like their localized housing authority, who's going to have that control. And then those are the people who make the decisions for the social housing. You want experts in charge. And maybe like, I can see there being some in between. Maybe I'm being a bit too much of a black and white thinker, where what they mean by this is that democratic control by the residents means that they have a say in like which representative they send to the public housing authority to represent their interests. But that is different than having all the tenants come together and vote on whether they should be investing in a new roof or lower rent or fixing the elevator or whatever it is. That seems way too burdensome. And it seems like a representative system, which we already have in our political system, would be a better way to go. Okay, let's just to wrap this up, I'll go through their medium term and long term goals and tell you if I agree or disagree from an economic perspective. Okay, so medium term, land reform and redistribution based on the sustainable use of land and natural interest in the general interest of the public, rather than the narrow interests of private landowners and capitalists. Don't know who a capitalist is. Am I a capitalist? Who's a capitalist and who's not? I guess being a capitalist means that your interests don't matter. I'm being facetious. I shouldn't say stuff like that. It's a bit too black and white. Okay, housing becomes a part of a general redistribution and public management of land and resources that society democratically controls. This is kind of already true to a certain extent. Like the way that land is used is determined by local governments. That's what zoning is. And you could argue that those governments have been corrupted by money, by private money from capitalists. I don't disagree with that. I think one of the most admirable things about the DSA is their focus on getting money out of politics. So I don't necessarily disagree about that. But yeah, if we have land reform that I guess isn't controlled by moneyed interests, that's fine. That sounds good. Okay, long term, the end of commodified housing. This is where they completely lose me. This is like this is where I have to get off the bus and say like I can't keep riding down this road. The end of commodified housing. Now I talked about my last stream about how commodified housing is a misnomer because housing is not a commodity. The definition of a commodity is something that is that can be like traded and is indistinguishable from each other, like oranges. Oranges are a commodity because it doesn't really matter which orange you get. Maybe some are a little blemished, but for the most part, it doesn't matter which orange you get. You can trade them, you can exchange them. An orange equals an orange equals an orange. But a home does not equal another home, does not equal another home. My home is different than my neighbor's home. Even though we are so close in proximity, the homes were built at different times, they have different layouts, they're on different pieces of land, they have different access to light, they have different setbacks from the road. There's so many different unique things that I can't just trade my house with my neighbor's house interchangeably. So that's why housing isn't a commodity. But let me stop being so literal. I think what they mean here is that, which is kind of scary, is they say is that they don't think that housing should be traded at all. That all housing should be socially provided, so that you don't have private ownership of homes that you can sell and buy, which I don't agree with. I think like just there's economic research that shows that as people get more money, they buy more housing. If you get like a 10% increase in your income, you spend about 10% more on your housing. So to tell people that like this thing that they're always choosing to buy whenever they get more money that they can no longer sell and buy, they need to go live in social housing, that just seems like that's not the future that I want. But this is the future that they are envisioning. Oh yeah, and they also say the end of the production of unalienated housing. I think what they mean by I don't actually know what they mean by unalienated housing. I know this concept of alienation that Marx talked about, how like people are detached from the production of the goods that they consume. So they're saying that like we should build our own houses. I don't think that can't be what they're saying. And the end of the places where people live supports their full flourishing as individuals and blossoming communities. I want people to live in places that support their full flourishing as individuals and blossoming communities. I agree with this end goal. We want communities that allow for people to interact with each other, socialize with each other, rely on one another, and like have interactions with their neighbors, where there are third spaces and access to public transit. I believe in all of that. I just don't think that we need to end the commodification of housing to do it. And I also don't think that this word commodification is even the right word for describing that. So this is the official DSA. Is it because you are connected with Redfin that I don't want to end the commodification of housing? Even if I didn't work for Redfin, I'd still want to own my own home. I wouldn't want to live in social housing. I think that we should have social housing for people who are housing insecure, because having a housing unit is better than having no housing at all. But I personally do not want to live in social housing. Like I said before, I don't even want to live in a home with an HOA, because I don't want to be showing up to the meetings. I don't want to be voting on whether to invest in the roof or not. I want to just make the choices for my own unit based on my own preferences. So even if I didn't work for Redfin, I would still be saying this. Okay, but so this is what the DSA website says, but this is not how these DSA candidates actually legislate, actually lead, actually do their political jobs, which I find very interesting. And when I'm talking to people who identify as members of the DSA, they're often telling me that I am like cherry picking the most extreme rhetoric about socialism, and that what they actually want is something in between socialism and capitalism, not like literal socialism. Now, I think that those people who are more moderate need to go talk to whoever is running their website and putting out their official policy, because on the official website, it is like full-blown socialism, seizing the means of seizing the land and having fully social housing. That's like what they say on the website. But in reality, the way that they legislate is much more YIMBY. So this article is a bit old. It's from May 31st, but I just put in an example of how like someone down in the DSA actually leads once they are in power. And Zoran Mamdani seems to be one of these abundance-minded people on the left, that he is announcing plans not only to boost affordable housing, but also to rezone for market rate housing. And he says that cities like Minneapolis and Seattle that have upzoned are successful examples, saying New York City has gone YIMBY. So even though there's like not really any YIMBYism at all, any like talk about zoning regulation, there was some stuff about land use, I'll give them that, or permitting reform. They like straight up say that let me see. Social housing does not offer an equal seat at the table to developers, investors, or city councilors. They're very anti-developer, but YIMBYs see developers as necessary partners in terms of increasing the supply of housing. I feel like that's an obvious thing to say, that if you want to build more housing, you need developers to do it. But Zoran seems to get that like you can't be anti-developer, that you need to pave the way for development of additional homes. And then the official DSA website, again, they put out this press statement about NYC DSA members voting yes on this YIMBY policy, on yes on city for all housing package. But they explicitly say that they like had to make concessions in terms of their principles in order to get this passed. Okay, so low city of yes is not the answer to New York City's affordability crisis. I mean, I don't think it's the sole answer. It helps, but it's not the sole answer. Nor does it represent our socialist vision of housing as a universal public good. So they're reiterating this point again, that they really think that housing should be universally public. NYC and DSA is proud of the concessions that our socialists in office were able to secure for working class New Yorkers. And I don't know if this is like just the DSA or socialist.nyc, the DSA chapter of NYC, like if they got together with these candidates in terms of the characterization of how they voted. I don't know if like Zoran Mamdani would agree with this characterization of this housing bill, that like these were concessions that were made, or these are his like actual beliefs that we should be approaching housing from a like free market, increase in the supply of housing perspective. But that's how the DSA chapter of New York City is characterizing it. That like, I'll go back to Alex Armeloff's tweet. He is characterizing Zoran and Nithya as abundance left, but it seems like the DSA would characterize it as, yes, we are abundant. We are promoting these abundance housing policies because we have to, in order to get the social housing that we want. And like I said, I support social housing too. I'm not saying there's anything wrong with social housing. I just don't get the antithesis to privately provided market rate housing. Like I think we can do both. I think that we should do both. I don't think it's an either or. I think that there are some people, like I said, who are very housing insecure that need a place to live, and social housing is probably the best way to get them there. Or housing vouchers. I think actually housing vouchers are an even better way to get them there. But the DSA seems to be so anti-developer and anti-landlord that they don't like the idea of giving money to the tenants to then pay to landlords or and landlords are paying to developers as a solution. They think that like that is corrupt in and of itself, which I don't agree with as an economist. I think that markets are efficient and get us better outcomes than purely democratically controlled housing. And like I said, there's economic theory to back that up. I'm not just like saying that as an ideology. I'm saying this because like we've done the math on, can voting get you as efficient of an outcome as a market allocated approach, and the math demonstrates that you're going to run into problems. And like I said, there are actual examples of this, like the Surfside condo collapse, where you can have people voting against their long-term interest because of myopia. They're not thinking long-term because that's like just the nature of human bias, or the nature of voting and who shows up to vote doesn't result in the best outcomes. So that's where I'm at. You let me know in the chat where you're at. I'm gonna read the comments for a second. William Somerville Hedgewood says that I don't think politicians should make specific housing choices full stop. Also, how do you feel about people losing? I don't mean by losing. Losing what? I mean, if politicians aren't going to make the choices about housing, then who should be? Is it fully free market, or you're saying it should be fully democratic, like no representation, like lowercase d? I'm not sure. William Somerville Hedgewood says that I work with rapid rehousing, and one of the problems is that the rent is just too damn high. Social housing could be a great middle path for folks who are struggling. Yeah, okay, so I'll give you an example of like a housing policy that is very much on the left that I support. I'm not against it. This idea of an affordable housing overlay. This is something that they did in Cambridge, and something that Francesca Hong in Wisconsin has a part of her official policy, which is that like, I get from a political perspective, it's going to be hard to get homeowners to upzone fully, like completely eliminate single family zoning. And maybe there's this compromise that we can make with homeowners where we're not going to upzone 100%, but we will upzone for anybody who is building affordable housing, for anybody like who is building housing for the homeless, or who's building housing that is priced at according to the median income or local incomes, or anybody who is building housing that is going to be a community land trust. I think that's like a good middle approach in a world where we can't get to my ideal, which is eliminating single family zoning 100%. I am okay with this middle approach of saying we're going to eliminate single family zoning for affordable housing, as long as we create pathways to finance that development, because developers are going to be more eager to develop market rate housing than affordable housing. So we have to make sure that there is the money to get the housing built in the first place. Otherwise, it just won't get built. If it's like you can rezone, but then like who's going to build it if they're not able to make a profit off of it? If it's an NGO or a nonprofit who wants to put their own money into it, great, let them do it. Francesca Hong's policy also talks about public financing for affordable housing. So using public money to finance the development to fill the gap that the private market developers don't want to fill. I'm okay with that. I'm okay with all of that. I really will say yes to anything that increases the supply of housing more than what it is currently at. And I agree that social housing is a great way to reduce poverty and help people, children born into this world. They're not making choices. We should be providing them with housing the same way we provide them with schools. That's my opinion. That's more of a political opinion. I know I shouldn't be getting into politics because this is supposed to be an economics thing, but I'm just saying that there are multiple approaches, and we got to make some compromises. But I think we should also acknowledge when we are working towards different end goals, because if we can understand the big fundamental things that we disagree about, then we can logically discuss them. You just got to face things head on. All right. Robert Clark says building housing is not a core business function of a municipality. The results have historically been lousy. It's a developer role. Yeah. I mean, I think that's why I'm going to say yes to everything, because nothing's perfect. There is nothing perfect. You can poke holes in the free market approach. You can poke holes in the social housing approach. And what I'm saying is we don't have enough housing, period. Let's let anybody who has a plan for building more dense be able to hear me now. I will try to edit that out of the YouTube when I go to post it. All right, sorry. What I was saying is that 54% of people say that they do not want housing where they live. So despite the fact that the vast majority of them seem to support policies that would result in more people being able to easily afford homes, they actually don't want to increase that supply where they live. But at a state level, we are implementing policies that kind of override this issue that nobody actually wants housing built where they live. And thanks to people for shouting out in the chat that you couldn't hear me earlier. Okay. All right. So have I talked enough about housing policy? Okay. So yeah, this is. I always try to order these to make the flow make sense. So the next topic I'll be talking about is the fact that some of these people on the left kind of have a point that the housing market is skewed towards the wealthiest people, and we need to do something about that. And we should be focusing perhaps more on housing for low-income people than just market rate housing, because what's happening over in market rate housing is that luxury home prices are taking off. They're rising 3 times faster than non-luxury prices. And I think that's actually a good thing in a sense, that non-luxury homes are not increasing in price. I mean, that's good that they're not going up quite so fast. But the reason why luxury prices are rising 3 times faster and why luxury sales are rising faster than non-luxury sales is that we have this economy where very wealthy people are able to navigate around high interest rates and housing affordability. So most homeowners are they're locked into their record low mortgage rates that they got during the pandemic. I talked before about how it would be too expensive to give up that mortgage and buy a new home because you'd have to get a much more expensive mortgage. And who wants to do that? But for wealthy people, they don't care. They this 3% mortgage, that's nothing to them. That's a rounding error in their stock portfolios. So the luxury market is moving much better than the non-luxury market because rich people do not care that the mortgage rates are high. They do not care that home prices are high. They have plenty of money anyway. And call that the K-shaped economy if you want, but it's definitely showing up in our housing market data. Let's see. What does Mike DeMello, a Redfin Premier agent, says? He says the luxury market has been immune to the housing slowdown. Hey, that's what I said. Especially in the most desirable beachfront areas. Yeah, if you want a beachfront home in Honolulu and you can afford one, you probably don't care what interest rates are right now. Affluent buyers who can afford luxurious homes are often insulated from things like high mortgage rates and economic uncertainty. Meanwhile, a lot of locals are choosing to rent because prices and rates are simply too high to buy. So I completely understand this sentiment that the housing market has been constructed for wealthy people, that wealthy people are fine, and locals are being priced out of the neighborhoods that they have built communities in and culture in. And we got to do something about it. I think part of the solution is building more housing overall. I think part of the solution is building more social housing. Just build more housing, period. All right. Okay. I'm going to talk about that. I already talked about the housing overlay. Talked about that. What is this about? Oh, did I talk about the jobs report? I'm already over time, so I don't know if I really want to get into this, but we got a kind of a nothing jobs report this month that doesn't really tell us anything because the data was kind of it was came in a little softer than expectations, but unemployment is still down, and it's kind of a mixed bag. So not a lot to say there. Let me see. I'm just going to do one more story and then wrap up. So immigration policy. Housing is political. I can't avoid talking about politics if I'm going to be talking about housing. So I'm going to get into immigration for a second. You're probably aware that we have had a much more restrictive immigration policy as of late. And Dallas is a place where there has been a lot of immigration of Indian workers on H-1B visas because there's this tech sector in Dallas that has been hiring really rapidly. And Dallas is also a place where it's pretty easy to build homes. So there's all these kind of new developments popping up all over Dallas, catered to these affluent tech workers who have a large constituency of H-1B workers. And according to this article from Bloomberg, is there an author? By Prashant Gopal and Tanaz Medshani. Sorry if I'm saying that name wrong. It's starting to impact the Dallas housing market. So they once accounted for 70% of sales at Schneider's Traditions homes. But in the past year, they've dropped below 30%. So this immigration policy is starting to spill over into the Dallas housing market. There's not a lot of demand, especially for these new builds. Construction is a lot easier to do in Dallas. Builders have been building, but they didn't realize when they started the project that their largest constituency of buyers were not going to be buying homes because of immigration policy. And I don't know if this proves JD Vance's point that like one way to address housing affordability is to crack down on immigration. This is a very localized account of like reduced demand for housing. And at least Bloomberg is not like saying this is a good thing. It means that these builders who like put their money into these investments don't have buyers waiting for them because those buyers can't stay in the country. Yeah. Okay. So I'm going to start wrapping up. Let me see if we got any more comments before I do. We'll just pop on over to Redfin. So that's the thing. Do you trust the numbers coming out of the DOL on jobs? I hope that's not too political. Yeah, I trust the jobs numbers. From what I understand, they're still mostly the same people working there who have always worked there. These are like career bureaucrats who are nerds. You know, they could be working in the private sector like me for more money, but they choose to work for the government because they like government work and they believe in the cause of reliable data. I don't think that they would be in those positions if they didn't care, because they could be doing something else. And I don't think that things have really changed too much. I mean, maybe we've had some people retire and people replaced, but from what I understand, like from economists who I know who work at the DOL or who work in DC and know what's going on there, the numbers are still reliable. We did have the government shutdowns, which messed things up in terms of data collection, because when the government was shut down, we weren't collecting some of that data. So that kind of messed with things. But I think the people working there are still experts that we should trust. Let's see. Oh, so many comments on TikTok. Someone asked, where are the immigrants getting the money to buy these homes? The immigrants that are buying in Dallas, these H-1B visa workers, they're making like $200,000 a year. They can afford to buy. These are like software engineers. So, I mean, if they were like undocumented immigrants, they wouldn't have the money to buy these homes or the documentation to buy it. But these are the people who were buying these homes in Dallas before the immigration crackdown. They were highly paid and able to afford to buy. Any other comments that I missed? Okay, so I hope you all have a great semi-quincentennial. Say that 5 times fast. I'm Daryl Fairweather, Redfin's chief economist. I'm also the author of Hate the Game, Economic Cheat Codes for Life, Love, and Work, out now. I think it's like only $9 on Amazon for a hardcover, so go check that out. Endorsed by Stephen Levitt. Stephen Levitt, author of Economics, called it fabulous. I always got to plug that. And I'll see you next week. Bye-bye.